Namaste and welcome everyone. This is Business at 9. I'm Ashish Parekh. Let's start with the big story this hour. Dubai's largest banking group, Emirates NBD Banks, has now announced an open offer to acquire up to 26% stake in RBL Bank. In fact, the offer price is set at 280 rupees per share, aggregating to 11,636 crore rupees. In fact, my colleague Ankur Mishra joins us with more details.
Yes, the details of RBL Bank open offer are out, and Emirates NBD will propose acquiring 26% stake in RBL Bank through open offer at a price of rupees 280 per share. Remember, this was the price which was announced for share allotment to Emirates NBD at the time of the announcement of the deal of $3 billion. If you talk about this overall announcement which was made earlier, that was for acquiring 60% in the bank, and now a 26% open offer which is mandated by Securities and Exchange Board of India has now announcement been made. The preferential issue valued estimate at 26,853 crore was the earlier announcement, and now this open offer has also been announced for rupees 280 per share. As far as the timing of open offer is concerned, this will open on December 12 and will remain open till 26th of December, and the allotment will happen in the month of January. Now, this is a part of the process which is there for the acquisition of a stake by Emirates NBD, but the management has already clarified that the stake will not cross 74% at any time, so that it complies with all the regulations. But the intention and the expectation of the bank is that mostly this open offer may not be subscribed.
Moving on now, we told you first, and now we are learning from our sources that Melih Misri has been ousted from the board of Tata Trusts after the resolution fell through due to lack of unanimity. In fact, Anurag Joshi joins us with more details.
A resolution to reappoint Melih Misri as a trustee of the Tata Trusts board has fallen through, and the reason for this is the lack of unanimity among the trustees. The 7 trustees, and they was a lack of unanimity on this matter, and there were 2 groups that voted separately on this issue. Noel Tata and there were 2 other board members. They had opposed Melih Misri's reappointment, along with Noel Tata, who was the chairman, Venu Srinivasan and Vijay Singh. They had voted against Misri continuing as a trustee, while 3 other trustees voted for Misri's reappointment as a trustee, and they were Darius Khambata, Jahangir, and former banker Pramit Javeri, who supported Misri continuing as a trustee. Misri's term as a trustee of Tata Trust is ending today, and the Tata Trust had last week proposed a resolution to reappoint Melih Misri as a lifelong trustee. And this resolution needed a unanimous approval of all the trustees of Tata Trust board. Noel Tata is the chairman of Tata Trust, and he was appointed in the position after the demise of Ratan Tata last year. And the significance of this is Tata Trust is holding various trusts about a 66% equity stake in Tata Sons, the holding company of India's biggest business group.
While we, of course, focus on everything that's happening in India, let's also shift our focus globally, where on the sidelines of the 9th edition of FII Institute in Riyadh, my colleague Anurag Shah caught up with Eddie Trump of the Trump Group to understand his view on India-US dynamics, the ongoing trade tensions, and, of course, what will drive India's growth ahead. Take a look.
I trust that it will be. We have a president who is very conscious of making sure that everybody gets a fair deal, and I'm sure that it will be resolved in everybody's benefit.
Okay, so my final question to you. So what's your views on Indian economy and India growth story? How big is the Indian market for United States?
I think it's massive. I think it's massive for both countries. Obviously, America is the greatest economy in the world, and I think it's essential for India to be in a good position with America, and likewise, I think it's to America's advantage to have a very good relationship.
Okay, sir. Other than that, sir, anything you want to say for global economy and changing world order?
I think that we're headed for a time where the world order will be solidified. I think that America, will lead the way, and I think it's just a matter of time that this will even out. And when I say even out, come to terms with everybody that it's fair for everybody. And when that happens, I think we'll be in a very good position worldwide.
Not just Eddie Trump there, we also caught up with Kamal Ahmed, the MD at Investment Bank at Barclays, to understand the key themes in global investments. And listen into this exclusive conversation.
We're seeing a rapid deployment right now of capital across the world in the areas of technology. Okay. And I think that is one thing that we're all very excited about. Sovereign AI is becoming an important theme for government investing. And we're also seeing a tremendous focus on military and defense. So I think those two sectors are benefiting a lot from government spending. From an economic perspective, there is a fair amount of uncertainty around the global economic landscape given the tariff situation right now in the U.S., which is obviously the world's largest economy. And I think most economists are waiting to see where the tariffs ultimately land and what the rates will be and what trade deals will get cut. And that'll give us a better view as to where the outlook will be for GDP growth, inflation, etc.
Okay. As you're born in India, so I can't let you go without asking a question related to India. So what's your views on Indian market? Are Indian markets are still expensive?
Well, I think Indian markets are a bit expensive, but that's only because there is tremendous growth in the region. And I think there's no doubt in everyone's mind that India is a long-term player in the global markets. It's here to stay, and it's going to take a bigger and bigger share of the global economy. And there's areas, beyond what we would call the traditional IT services market that are driving the exports of India. We're starting to see major manufacturing companies like Micron set up operations in Gujarat, and we think that there's going to be an emergence of high-tech manufacturing in India, which will add another leg of growth and another a leg to the stool of growth of the Indian economy. So I think it's a very exciting place to be right now.
The Union Cabinet today approved the nutrient-based subsidy, also called as the NBS subsidy on NPK fertilizers for Rabi season 25-26. Now, the Cabinet has also approved a hike in NBS subsidy. Union Minister Vaishnav also said that the Cabinet has approved a subsidy of about 37,952 crore rupees for Rabi 2025-26 season. In fact, the rates will be applicable starting 1st October. He's also added that the initiative will ensure the availability of fertilizers to farmers at a subsidized, affordable and reasonable price as well. In fact, Prakash earlier filed this report. Take a look.
Well, it's a confirmation of our news break as the Union Cabinet has approved the NBS subsidy on NPK category fertilizer for Rabi season 2025-26. There's significant hike in NBS subsidy amount. In fact, approximately 38,000 crore has been approved by the Union Cabinet as overall subsidy amount for Rabi season, effective from 1st October 2025 to 31st March 2026. In fact, subsidy amount is way higher than the last year allocation of rupees 24,000 crore. The Cabinet has approved higher subsidy amount for Rabi season, essentially to offset high international prices. The amount has been increased by roughly rupees 13,500 crores. A very significant development coming in. The government is trying to offset high international prices to maintain sufficient availability of fertilizer in domestic market at affordable prices. That essentially means that the fertilizer companies would be given higher subsidy amount to offset high international prices. That also means that the overall subsidy allocation, fertilizer subsidy allocation for current financial year is going to be increased, which is set at rupees 1.67 lakh crore for the current financial year on back of higher allocation for Rabi season.
And in some big news now, the Union Cabinet today approved the terms of reference of 8th Pay Commission, which will revise the salaries of nearly 50 lakh central government employees. In fact, former Supreme Court Judge Ranjana Prakash Desai will be heading the commission as the chairperson. Prakash filed this report. Take a look.
Well, in an interesting development, after 10 months of the formation of 8th Central Pay Commission, today the Union Cabinet approved terms of reference for 8th CPC. Along with that, the announcement related to necessary appointments to the commission has also been made. In fact, former Supreme Court Judge Ranjana Prakash Desai will chair the commission, which is expected to take several factors into account while submitting its recommendations. As per the approved DOR, the overall economic conditions in the country and need for fiscal prudence will have to be taken care of. The requirement to ensure adequate resources for development and welfare expenditures. Along with that, the TOR also include the unfunded cost of non-contributory pension schemes, along with the impact on state government finances as the states generally adopt CPC recommendations with modifications. The Commission will have to take care of all these factors before submitting its recommendations to the government. Interestingly, the formation of a Central Pay Commission was made before assembly election in Delhi in the month of January, and approval related to terms of reference came before Bihar elections. The commission has to submit its report within the next 18 months, essentially at the time of assembly elections in key states such as West Bengal and Uttar Pradesh.
And of course, we are getting you all the details about US President Donald Trump's Japan visit. He's addressed troops aboard the aircraft carrier USS George Washington, which is stationed in Japan. He told cheering troops that he is not going to be politically correct, adding that if we are going in a war, we are going to win the war. Earlier, he signed a rare earths deal as well with Japan's newly elected Prime Minister Sanae Takaichi. He also had high praise for her as the two leaders heralded a golden age in their country's alliance. In fact, Takaichi told the troops that Japan was committed to reinforcing defense capabilities, and after Japan, Trump also will fly to South Korea where he will meet the Chinese leader Xi Jinping.
This woman, this woman is a winner. So, you know, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right. But the cherished alliance between the United States and Japan is one of the most remarkable relationships in the entire world. Really, there's never been anything like it. Born out of the ashes of a terrible war, our bond has grown over 8 decades into the beautiful friendship that we have. It's a foundation of peace and security in the Pacific. You see it? So on behalf of all American sailors stationed in this beautiful country, let's hear it for our allies and the Japanese self-defense forces and all of the Japanese people that we love and respect. And I have such respect for Japan and the country.
Well, of course, Trump does what he does best. We'll, of course, keep a track on his visit to the Japanese coast as well. And, of course, what happens in South Korea, where he'll be meeting the Chinese president as well. Meanwhile, it's time for a short break. We'll be right back. And of course, Amazon is also to slash 14,000 jobs. That's of course the big news that we're getting right from the world of tech. The Q2 earning of Amazon, of course, is expected to be out as well. My colleague Anjali Palod is getting us more details.
Right. Amazon has officially confirmed that 14,000 jobs will be affected in a latest round of layoffs from the company. The company has announced these job cuts in a blog post. And they've said that communications from leaders to teams and individuals will go out today. However, the company did highlight that they expect to continue hiring in key strategic areas. Now, earlier reports stated that about 30,000 layoffs are anticipated in the company, affecting 10% of Amazon's workforce. And now the company has come out in a blog post stating that 14,000 confirmed job cuts are going to be undertaken within Amazon. Now, the Senior Vice President of People Experience and Technology at Amazon has said that they will identify opportunities to remove layers, increase ownership and realize these efficiency gains. And she's also said that this generation of AI is the most transformative technology we've seen since the internet, which feeds into the speculation or the thought that it is the AI or the realized gains from the use of AI that is leading to redundancies in the current workforce in Amazon, and that is why these job cuts are being undertaken. They've also said that they will be shifting resources to ensure that they're investing in their biggest bets, and they need to be more organized. They need to be organized more leanly with fewer layers and more ownership. That's the word coming in from the Amazon management. In fact, they've also announced some support for the impacted employees, saying that companies is going to offer employees 90 days to look for a new role internally, and that recruiting teams will prioritize internal candidates. And additionally, they will be offering severance pay, outplacement services and health insurance benefits to those affected in this round of job cuts.
In fact, we earlier also spoke to Shantanu Rooj on the impact of AI on the job market, particularly as far as the tech space is concerned. Listen.
This AI-led transformation of the entire employment industry for the last so many quarters already. Today, that's already started showing up its results today, right? So we already knew that several job roles will start getting erased as AI becomes more powerful, more intelligent, and become mainstream in multiple businesses. And actually, that's started happening faster than we could have thought about. So in many industries, this is, I think, in my opinion, the changes that you're seeing at Amazon is just the tip of the iceberg. You'll start seeing this in many industries across different countries. You'll start seeing this in very different job roles, because as industries, organization, and the world of work goes through this transformation, it's very difficult to predict today that what will change. The most cliched statement would be that new job roles will get created. But I'm sure that none of us understand that which job roles will get created.
Now, the Federal Reserve is also poised to cut interest rates by 25 BPS this week. It's a second reduction this year in an effort to shield the labor market from further slowdown. Rising jobless claims and a delayed flow of data due to government shutdown have also, of course, heightened caution among policymakers. Ravinder tells us what to watch out for.
Well, yes, there is an anticipation that the US Fed rate may cut a rate of 25 basis points in the upcoming next meeting, which will bring the policy rate to 3.75% to 4%, and this move comes amidst signs of easing inflation, and US CPI rose to 3% in the September month, slightly higher than the 2.9% in August, but still below the economist's expectation of 3.1%, and future markets now imply a 95% chance of another rate cut in the December month, while the probability of an additional cut at the Fed's January meeting has increased to 55%, up from under 50% previously. Remember that at the last meeting, Fed chairman has said that the central bank was right to wait and see how tariff, inflation and labor market evolve before taking further action. And regarding the future rate trajectory, Powell said that the median projection for the federal fund rate is 3.6% by end of 2025 and 3.4% by end of 2026 and 3.1% by the end of 2027, about 225 basis point lower than the June's forecast. Meanwhile, the GDP projection has been revised upward for CY25. GDP projection has revised from 1.4% to 1.6%, and for CY26, it has raised from 1.6% to 1.8%. And if we look at the past trend of the rate cut in December 2024, policy rate was at 4.5 and in September it came down to 4.25%, and for the upcoming analysts are anticipating another 25 basis rate cut.
Global developments are coming to bite Indian units of major players amid restructuring across industries. Anjali Palot joins in with the details.
Nestle India has begun laying off employees across functions and also taken an internal restructuring exercise. This move is a part of the larger layoffs exercise declared by the global CEO. Nestle SA has announced plans to slash nearly 16,000 jobs over the course of the next 2 years, and that is going to impact about 6% of the global workforce of the company. The company has also raised its target for cost savings to 3 billion Swiss francs by the end of 2027 from 2.5 billion francs earlier. Back home, Nestle India is realigning its business structure. The company has dissolved the standalone dairy category, and products within this category are being moved to other divisions now. For example, milk powder is being moved to nutrition, whereas the ready-to-drink coffee is now being moved under the beverage category. So this is the kind of restructuring that is happening within the company, and there are of course layoffs happening across different functions as well. In a statement to ET Now, the company has said that the workforce reduction applies globally and will be subject to consultations with various markets before being implemented. Now, Nestle India currently employs around 8,630 employees, and while they've not given a clear number of how many jobs will be impacted, sources indicate that the impact on the Indian arm of the FMCG giant will be proportional to what is happening globally. So about 6% of the workforce is being impacted globally, so we might see a similar impact on Indian jobs as well.
India's industrial production now comes in at 4% for the month of September, significantly higher than expectations of 2.6%. Manufacturing sector continues to report a robust growth as well. In fact, for the month gone by, it came in at 4.8%. Mining was the only sector which reported a degrowth. Let's listen in to the IIP experts on the numbers.
On this number, I thought after looking at the core sector number that we were going to get a lower growth than this, but manufacturing has done better than what we were expecting, coming in at about 4.8% YOY in the month of September. And I think this is going to be a sort of portent of what is to come in terms of what we already know about the festive season having been quite robust. My sense is that overall, if we look at Q2 and Q3, we will have this little bit of concentration of demand really coming in the month of October.
Here also the number is holding in that particular zone. But what is more interesting to me, while I am yet to see this particular month's number, in the recent 1 or 2 months I have seen one green shoot is that the intermediate goods number started inching higher. I think many a times it's a very significant, factor, and that's a positive factor.
Shifting our focus now, severe cyclonic storm Monta in the Bay of Bengal has now started making landfall near Andhra Pradesh's Kakinada. The Indian Met Department has now said that it will continue to move northwestwards across Andhra Pradesh coast between Machilipatnam and Kalingapatnam around Kakinada during the next 3 to 4 hours as a severe cyclonic storm with a maximum sustained wind speed of 90 to 100 km per hour, gusting to 110 km per hour. This, of course, has been revealed by the weather body IMD in its latest update. Well, let's hope that everyone in the region stays safe. On that note, it's a wrap on this edition of Business at 9. Lots more lineup on the other side. Stay tuned.